Hey everyone, welcome back to the channel, which is all about income oriented investing. But today's video will not be about income investing. So it will be actually about the other two styles of investing, the growth and dividend style. So if you're new to do-it-yourself investing, if you're Canadian, the first thing you will realize once you start doing research is there are a lot of options out there. There's a lot of ETFs, there's different ETF providers, so it could be very daunting and you could be very intimidated if you're a brand new Canadian do-it-yourself investor. The second thing I want to mention is I've said this before and I'll say it again. I am not against any style of investing. Just because I'm an income focused investor, it doesn't mean that I am against or don't believe in the growth style or the dividend style. And this video will hopefully prove it to you. So this video I will talk about, really go over the Canadian ETF landscape, and we'll go over the what I feel are really the most popular growth and dividend style ETFs in the Canadian landscape. And these are really ETFs I feel that you should know about, especially if you're a newer investor. Whether you decide to be, a growth investor and go with the mainstream passive index ETFs, or you want to be more of a dividend investor and focus on dividend ETFs, it's completely fine. But I'm going to go over the biggest and popular ETFs in both categories, from the three pretty much biggest providers in Canada, ETF providers: Vanguard, iShares, and BMO. And so this will give you a good idea of the Canadian landscape in terms of ETFs for growth and dividend, because in my opinion, I feel that you should really know these ones right off the get-go. It will save you a lot of time and energy and research, and you will quickly realize that many of them are very, very similar. So let's get started. So let's start with the growth category, everyone. And I just want to reiterate that this is for the Canadian landscape. So all these ETFs are listed on the Canadian stock market on the TSX. And when I mean growth, I'm pretty much referring to the big index ETFs. So really the index ETFs is where you're going to capture the entire stock market, basically. So, and again, I'm going to go over the ETFs that the three biggest providers offer: Vanguard, iShares, and BMO. So let's start with, how do I get exposure to the overall Canadian stock market? So we're going to look at Canadian stock market, US stock market, and then the world as well, right? So let's start with Vanguard. So very, very popular index ETFs from Vanguard here to capture the entire Canadian stock market that I feel you should know about, and you'll probably see this when you do your research. VCN is one. So VCN is the Vanguard FTSE Canada All Cap Index ETF. So this pretty much captures the entire Canadian stock market. Very, very simple, very, very low fee, typical of an index fund. You have your typical high 2, low 3% dividend yield. Because the Canadian market has a lot of dividend stocks, you could always expect a fairly decent yield near the 3% range. And VCN is no exception at 2.84. So VCN, when you see all cap, it means you're getting also the smaller to medium sized companies. All cap means capitalization or market capitalization. So VCN, if you scroll down, has over 100 stocks. And you could look at that if you just scroll down at the portfolio. You see that here, 185 stocks. So you have mostly big cap, so 80% in large companies, but you have 1% in large to medium, 10% in medium, and a little bit in small and small to medium. So this is pretty much like capturing the entire Canadian stock market, guys. So VSN is the first ETF. You also have VCE. So this is very, very similar. And if you actually compare, you click on the 5-year stock chart, you can see that they're almost identical. So VCE is kind of the same thing. It's also, an index fund that captures the entire Canadian stock market. 0.01% more in management fee. But the main difference is that this one really focuses on the big companies only. So there's about 50 stocks in here, but obviously very, very, very similar exposure. So these two are from Vanguard, which are ETFs that basically you can't go wrong. It'll capture the entire Canadian stock market with one fund, so it's diversified. BlackRock, sorry, not Black Shares, but BlackRock or iShares. I kind of mixed the two. So you have two. You have XIC, the iShares Core S&P TSX Capped Composite Index. So all these ETF guys are going to have pretty much the exact same stocks. Very, very, very similar. You see this here. own the entire Canadian stock market, low cost, designed for a long-term core holding, right? So they're all very similar holdings. They're going to have very similar fees and very similar dividend yield. So XIC is your big one from BlackRock, which is kind of like the same thing as VCN. They also have XIU, which is a little bit more concentrated because it's the TSX 60 index, so it's the top 60 companies in the Canadian market. So very, very similar, obviously. Kind of more, I guess, like a VCE, where it's a little bit more concentrated in the bigger companies. So XIU could be compared to VCE, whereas XIC could be compared more to VSN. So VCN, sorry. So those are the ones from Vanguard and iShares. BMO also has their own called ZCN. So this is, again, they all have the same sounding names, the TSX capped composite index ETF. So it's, again, like capturing the entire Canadian stock market, very similar, management fee. The yield is a little tiny bit higher, over 3 here. So it's going to have, again, mostly concentrated in the big cap Canadian company. So that's it for the Canadian landscape. So these ETFs really capture the entire Canadian stock market. I think you should know them by heart or be aware of them. Now, how do we capture the overall US market? Well, the king of all the US indexes is the S&P 500. So top 500 companies in the US, a great way to own the whole US stock market, basically. And the most popular one is VFV. So VFV is from Vanguard. It's the Vanguard S&P 500 Index ETF. And remember, these are all, although they're all American companies, they are listed on the Canadian stock market. So these are still Canadian ETFs. So VFV is Vanguard's S&P 500. XUS is the BlackRock iShares S&P 500. Same exact thing. BMO has ZSP. That's their version, S&P 500. So all the same companies, everyone. And in my opinion, it's really the S&P 500 is the best index to capture the overall US stock market. Now, what if you want the whole world? So we saw Canada, we found the US. Is there an all-in-one kind of solution where you capture not only Canada or the US, but the entire world? So it's like owning the entire stock market in the whole world. And yes, there's 3 options. And of course, there's a Vanguard one, iShares one, and BMO one. And they're all extremely easy to remember because they have the same last 3 letters. So VEQT from Vanguard, XEQT from iShares, ZEQT from BMO. So what do these hold? Well, this is an ETF that holds other ETFs, which makes it as if you're owning the whole entire stock market. So if you scroll down, you look at portfolio, and we find out what does this hold. You have 43% in this ETF, which is a Vanguard US Total Market Index ETF, which is kind of like an S&P 500, I guess, but probably even more broad. So this takes care of your US exposure. You have your Canada all cap, that takes care of your Canadian exposure. And then you have this one, the Vanguard FTSE Developed All Cap X North America. So developed countries excluding North America. So this will take care of your Europe, your France, your UK, your Germany, your Switzerland, your Japan, your Australia. So developed nations outside of North America. So you have 20% there. And then you have a little chunk, 7% in your emerging markets. So things like China and Brazil and things like that, the more emerging economies. So this is really an ETF that holds multiple growth index ETFs, which will basically capture you the entire world. So it's the same type of story with the XEQT, except of course they're going to put their iShares ETFs in here. So again, you have an S&P total US stock. You have this one, which will capture your developed outside of North America. You have your Canada one, which is literally XIC, which is one we saw. And then you have a little bit in emerging markets. BMO, same types of deal, everyone. If you go to holdings to see what's in it, you have they have ZSP, which is their S&P 500. You have ZCN, which we saw, which is the overall Canadian option. So 40%, 41% US, 25% Canada. Here is the BMO EAFE, which is Europe, Australia, Far East, and Australia, I believe. So this is developed outside of North America, and then you have emerging markets as well. So these 3, it's basically, if you don't want to deal with getting a Canada one, a US one, or a Europe one, you just get this and you have, it's like owning the best indexes all around the world. So very, very, very simple. These ETFs, you should all know about these. They're very, very big, popular, and common. So whether if you want to be a growth or index investor and you just want to be, make your life as simple as possible and say, look, I just want to buy the entire stock market or the entire Canadian market or the US market, these are your best options. Now let's check out the dividend options. All right, so we checked out the popular growth index funds or index style ETFs. What about if you want to be a dividend investor? You really want to focus on dividend stocks, but you don't want to pick and choose your own individual dividend stocks, which is very tedious and could be annoying and just raises your risk, right? Well, you could always get a dividend style ETF. So just like the index funds, we're going to look at the Vanguard, the iShares, and the BMO dividend focused ETFs in Canada, in the US, and in the world once again. So let's get to it. So for your Canadian option, you have VDY from Vanguard. This is very, very big, very, very popular. So this is going to give you exposure to all the best Canadian dividend stocks in Canada. So because it is more dividend focused, you're going to get slightly higher yield on your ETF here, and typically they give it out monthly. So VDY is extremely popular. It's an easy way to get the best dividend stocks in Canada with one ETF. Of course, iShares actually has four versions. So there's XDV, Canadian Select Dividend Index, which is just 30 companies, but the highest yielding 30 companies. So this is probably going to have slightly, I'm assuming, a little bit more yield. Yeah, a little over 4. So slightly over VDY. So this is it's a little bit more concentrated. There's 30 stocks, but 30 of the best Canadian dividend stocks. Then you have some more broader options. So this is, probably have a lot more stocks. So you have XEI, which is the TSX composite. When you see TSX, that's Toronto Stock Exchange. That's the overall Canadian market. High dividend index ETF. You also have CDZ, which I find unique because it focuses only on Canadian dividend aristocrats. Aristocrats means it's dividend companies that keep growing your dividends over time. There's a special screening process that goes in to only put dividend stocks that don't cut their dividend and raise them over time. So you have CDZ, and then you have another one called the Canadian Quality Dividend Index, XDIV. So all very, very similar. Each one are kind of a tiny bit different. It's up to you to figure out which one you like the best out of the iShares one. But iShares, you got 4 options, everyone. And of course, you got the BMO option, which is ZDV, the BMO Canadian Dividend ETF. Pretty straightforward for Canada. Now moving on to the US, we're going to start with the Vanguard option, VGG. VGG is the Vanguard US Dividend Appreciation Index. So this is going to have US dividend companies. iShares, it's called XHU, the US High Dividend Equity Index. There's also another one here from iShares. So iShares has 2 of them. The US Dividend Growers Index. This one is Canadian hedged, whereas this one is not. So whenever you see Canadian hedged or hedged to the Canadian dollar, it means that currency fluctuations are not going to impact the fund. So if the US dollar starts getting stronger and the Canadian dollar gets weaker, that's actually a good thing if you don't have the hedging. So that would be a good thing if you have this one, but the opposite is true. If the Canadian dollar is getting stronger and stronger, this one will perform slightly better. But the stocks inside are pretty much the same. The easiest way to think about it is if you feel more strongly about the US dollar, if you think that's going to go up over time versus the Canadian dollar, do not get the hedged one, get the non-hedged one. And BMO has ZDY, which is, same type of deal from ZDV or a brother ETF, except instead of Canadian dividend stocks, it's US dividend stocks. So now we're going to look at the developed outside of North America. So let's say you want outside of North America, you want Europe and Japan and things like that. You have VIDY, which is developed excluding North America high dividend. So you get all the best dividend stocks outside of North America, but only in developed countries, not the emerging markets. BMO has the international one. So ZDV for Canada, ZDY for US dividend stocks, and ZDI or ZDI for the international dividend stocks. So this is going to be Europe and anything outside of North America. And then you even have a global option. I'll give you 2 ETFs where it's kind of like an all-in-one, kind of like the VEQT, XEQT, ZEQT, but for dividend stocks. iShares has one called CYH, the Global Monthly Dividend Index. So like it says here, dividend paying companies all around the world. So if you go to exposure breakdown, you could actually see the countries. So 61% in the United States, United Kingdom, Brazil, South Korea, Spain, Australia, China, Japan, Italy. So this is all around the world. So Canada, US, developed, outside North America, a little bit of emerging markets. So a great all-in-one dividend solution. And I believe, yeah, they have another one called XDG as well, Global Quality Dividend Index ETF. So global stocks with above average dividend yield and steady increasing dividends. So probably be a little bit more stricter with this ETF than this one, where there's more of a screening. But either way, they probably have they're very similar. So there you have it, everyone. This is really your most popular dividend focused ETFs in the Canadian ETF landscape. So hopefully that gives you an idea of some of the more popular index ETFs and dividend focused ETFs in Canada. I might have missed a few, and of course there's other providers, but if you start comparing and actually looking, they're pretty much the same, right? The S&P 500 ETF from Vanguard versus iShares versus BMO versus probably other providers are pretty much the same. It's the S&P 500. So it's up to you to do your research and decide which ones you actually want, or you might even want the all-world option, right? The all-in-one, which is a lot more convenient. Same thing on the dividend side. So I'll say that again, I'm not against the growth or the index style investing or the dividend style investing just because I'm an income investor. I think all three strategies work long term. So if you're newer to Canada, I suggest these are the ETFs you should look at, especially if you want to start by being a growth investor, a dividend investor. And of course, do your own research just like I did. It's very easy. You just Google the stock symbol ETF, and you'll get the first link, and you could do your research. You could check the management fee, check what kind of stocks are in there, what's the dividend yield, is the payout monthly or quarterly. So another thing I encourage you to do, especially if you're a newer investor in Canada, do-it-yourself investor, is always do your research on the fund's official website. Not Seeking Alpha, not Motley Fool, not Reddit, not anywhere else, but on the fund's official website. So hopefully this was a good starter video in case you're newer to investing. And of course, if you want to think of being maybe an income investor, well, that's what my channel is all about. So make sure you're subscribed. Hey, don't go yet. I have some important reminders, including some more recent ones, and I'll try to keep it as brief as possible. And for everything that I'm about to discuss, the links and info are in the video description below. So first of all, if you didn't know yet, I do offer a one-on-one coaching session where you'll have a 1-hour Zoom call with me where you could ask me all the questions you want, and I'll help you and assist you best I can. Just remember that I am not a licensed or registered financial advisor or planner. So to book a session, go on my website, passiveincomeinvesting.ca, and right there on the homepage on the left hand side, there is a small video. Watch that video to know how to book a one-on-one properly with yours truly. Also on my website, you could purchase my digital product, the Ultimate DIY Investing Package, which is on version 4 right now. It comes with lifetime updates, so you only have to buy it once. And this is really a reference tool or a companion tool to help you build your own portfolio according to your needs and your objectives. It has lists of funds. It has sample portfolios for both Canadian investors and American investors. So make sure to check it out on my website. I actually created a video which shows the product from A to Z because I don't want you to spend money unless you know exactly what you're getting. So make sure to check that video out on my website. And don't take my word for how good it is. Check out the reviews. There's over 300 of them, and they are all 100% real reviews. So here's some more updated news or recent news. I am now on Blossom, a new investing app designed for investors. I've been using it for a few weeks now. I think it's really, really great. It has a really cool feature where users could actually add and share their portfolios and what they're buying and selling every day. So you could actually link your investing account so it's updated automatically on a daily basis. I recently added my own main portfolio so you could follow how my portfolio is doing live and what I buy every month. Really, really cool. It's like a mix of Facebook and Twitter, but specifically for investing. So get on your phone, click on the link in the video description below and download the app. It's 100% free, so you too could share your portfolio. Just remember to look for me and follow me. My username is Adrian, PII altogether. Also, I do have a referral link for Questrade, so you could get $50 worth of free stock purchases. This is the Canadian discount broker that I use and I recommend. Unlike Wealthsimple, the other popular discount broker in Canada, you could drip everything you want. It has all the stocks, and it also has dual currency accounts. Very, very convenient if you're buying both Canadian stocks and American stocks. I have a Questrade video, by the way, which gives you a little tour of the features, so make sure to check that out. I also have a referral link for PASSIV. This is the portfolio tracking tool that I use to consolidate all our accounts to get a nice bird's eye view, so you can consolidate all the information together for easy tracking and stats as well. Also, our Facebook group, Passive Income Investing, is now an invite-only private group. So to join it, you need to click on the link in the video description below and give the group a like to get invited. So we take pride in making this one of the best investing Facebook groups out there with over 13,000 members. There's no scams, there's no spammers, and negative and doomsday people, we kick them out right away. Also, follow us on Instagram if you want a little bit more of our personal journey here in Panama. And lastly, just remember everyone, I am not a licensed or registered financial advisor. This channel is all about my personal investing journey and how I invest to generate high passive income from a diversified portfolio of high yield funds. It's for educational purposes only, so don't forget to do your own research and due diligence. And of course, stay safe everyone, stay healthy, and of course, stay passive. See you next time.